Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Monday everybody. I hope you had a lovely weekend and have a productive week ahead. My apologies in advance. We're going to start by discussing the economy, and the data and analysis we need to cover is quite mixed. Indeed, with some actors cautiously optimistic and others quite pessimistic. It is quite difficult to make a clear conclusion when looking at all of this, but as regular viewers know, and I hope appreciate, China Update is not here to spoon-feed easy-to-digest narratives, but rather to follow and examine relevant developments, even when this results in seemingly contradictory and at times confusing findings. With that said, let's move into the first part of the video on the Chinese economy. Last week was China's so-called Golden Week holiday period. We now have some of the initial numbers from the extended break, and the economic performance was mildly positive. Positive in that the official tourism revenue from Golden Week surged year on year from the low base of 2022 zero COVID, but only mildly positive in that tourism revenue only came in slightly above its pre-COVID level, and by some metrics, was below pre-COVID levels. According to official numbers published by China's Tourism Ministry over the weekend, domestic tourism revenue reached 753.4 billion yuan, $103 billion, for the 8-day holiday period, an increase of 1.5% from the comparable level in 2019. The number of people travelling was up 4.1% compared with 2019. We also need to take note that this year's holiday period was 1 day longer than in 2019. Meaning spending per tourist is still 2% below the 2019 levels. Both these data points were under the ministry's own forecasts too. Year on year, these numbers were up 130% and 71% respectively. Quote, "This shows that Chinese people are keen to get out and enjoy life now the economy has reopened, but still cautious about spending. People are worried about their income prospects amid a shaky labour market." End quote. And Larry Hu, head of China economics at Macquarie Group, expressed in a note, quote, "The scaring effect caused by the pandemic has not completely gone away. The Chinese economy has continued to improve at a modest pace." End quote. Performance during Golden Week varied across sectors too. For example, movie industry data provider Dengta said as of Friday noon last week, China's box office during the Golden Week holiday exceeded 2.6 billion yuan, a massive jump compared to 1.5 billion yuan last year, but down 39% from 2019's pre-pandemic levels. The consensus among analysts appears to be that the travel data is not enough in isolation to conclude that consumer sentiment has improved decisively. Indeed, China-based analysts remain the most cautious. Quote, "The travel frenzy is obvious to all, and the per capita consumption during the long holiday has exceeded that of 2019 for the first time. This is a good sign. However, travel consumption has an insufficient spillover effect on real estate consumption and is not strong enough to be a substitute. The recovery of the economy and market in the fourth quarter requires more powerful policy pivots, debt reduction, and the second round of real estate loosening." End quote. International analysts, however, appear more optimistic than their Chinese peers. Last week, Citigroup and JP Morgan both raised their forecasts for China's annual growth to 5%. Up from 4.7% and 4.8% respectively. Nomura also raised its 2023 growth forecast for China from 4.6 to 4.8%, though its chief China economist, Lu Ting, did warn that consumption could continue to cool in the coming months, expressing in a note, quote, "Looking ahead, as schools reopen and the summer season draws to a close, it seems the recovery momentum in the service sector may lose steam again, especially after the Golden Week holiday." End quote. Why have these banks raised their growth forecast? Well, economists with Citibank wrote last week that they believe retail sales and industrial production may improve, adding, quote, "The cyclical bottom is here, with all eyes on whether organic demand will pick up amid gathering policy momentum. Previously, we had downgraded our GDP forecast out of policy disappointment." End quote. However, since the rollout of property easing measures over the last month, which we've been following here on China Update, quote, policy momentum exceeded expectations clearly, end quote. However, the still very sick property sector still remains the wild card for China's economic outlook. According to China Real Estate Information Corp, the value of new home sales by China's top 100 developers fell 29% year-on-year in September. In a recent note from Bloomberg Intelligence, analyst Kirsty Hung expressed these numbers, quote, indicate a need to step up policy stimulus after a wave of support measures didn't revive sentiment much. End quote. And speaking of Bloomberg, the US outlet also reports that Hong Kong's private wealth managers are growing more pessimistic after a sharp drop in assets under management as more clients seek to park their money elsewhere. That is according to a survey by the Private Wealth Management Association, jointly conducted with KPMG China. According to the report, 15% of private wealth managers, up from 8% last year, predict growth in assets under management will be below 5% over the next 5 years. Quote, the more subdued outlook comes amid increased geopolitical tensions, which, after the economic environment, was the second biggest concern among the firms surveyed. End quote. The outlet explains that fund inflows to Hong Kong were $15.5 billion in 2022, a collapse of 80% versus the previous year. The total assets of Hong Kong's private banking and private wealth management businesses were $1.15 trillion at the end of 2022, down 15% versus the previous year as markets declined. The Private Wealth Management Association also identifies multi-shoring, opening accounts in 2 or more jurisdictions to spread risk and diversify investment, as a significant trend. And Singapore has been a major beneficiary of this trend, with the share of Hong Kong clients with accounts also booked in Singapore rising to 73% from 64% last year. However, the association expresses that this decline does not yet mean the end or death of Hong Kong as a major financial hub. Quote, while this trend may be considered concerning on the face of it, our discussions with the industry on the results indicate that the impact is less significant. Many noted that what is critical is that the relationship and assets are still managed from Hong Kong, with the opening of accounts being part of a risk diversification strategy of using dual booking centers across Hong Kong, Singapore, and other locations. End quote. The question surrounding the decline of Hong Kong is a complex and ongoing one, which we will continue to follow here on China Update. Next up, Beijing reacts to the Israeli-Hamas conflict. Hey everyone, if you enjoyed today's episode of China Update, don't forget to hit the like button, liking, sharing with people who you think would enjoy this sort of content, and subscribing all help the channel grow. And for anyone who can go the extra mile and help keep China Update financially sustainable, Patreon and Buy Me a Coffee links are in the description below. As always, thank you so much, everybody, for the ongoing support. Next up, of course, over the weekend, the world has been watching and reacting to the fast-moving violent events unfolding between Hamas and Israel. Many geopolitical-focused channels have pivoted to covering these developments. China Update is a channel about China, and thus these developments are largely outside the scope of this channel's content. However, we do need to follow how Beijing reacts to the situation in Israel, as it touches on Sino-Israeli relations specifically, and Beijing's Middle East policy generally. It is also another case example of how Beijing can react to an unfolding international crisis. On Sunday, in an official statement, the PRC Foreign Ministry expressed that it was, quote, deeply concerned about the escalation of tensions and violence between Palestine and Israel, end quote, calling for an immediate ceasefire. Quote, all parties concerned are urged to exercise calm and restraint, to cease fire immediately, to protect the civilian population, and to prevent further deterioration of the situation. End quote. Interestingly, the Foreign Ministry did not issue any condemnation of the initial attack, rather saying that this, quote, fully demonstrates that the long-term stagnation of the peace process is unsustainable, end quote, adding, quote, the fundamental way out of the Palestinian-Israeli conflict lies in the implementation of the two-state solution and the establishment of an independent Palestinian state, end quote. Like so much of China's traditional foreign policy, Beijing has avoided taking sides in Middle East conflicts, seeking instead to be a sort of faraway, disinterested, friendly trading nation to Israel, Iran, and Arab states. However, as China has emerged as a major power and moved away from its Deng-era foreign policy of 韬光养晦, keep a low profile and bide one's time, towards the Xi-era policy of being more active and assertive on the global stage, the international community is more and more expecting China to take a clearer position on crises as they emerge, and to back words with actions too. This was very much on display in Beijing's reaction to Moscow's war on Ukraine and the wedge it placed between China and Europe. And indeed, Israel has been disappointed with Beijing's Sunday statement, with the deputy chief of the Israeli mission in Beijing expressing the same day, quote, "When people are being murdered, slaughtered in the streets, this is not the time to call for a two-state solution. We believe that China, as a superpower in the world, which many countries are looking to see the reaction of China, should have taken a stronger stand." End quote. We also note that China's alignment towards the Palestinian cause is also a legacy of the Cold War and its support for national liberation movements. This alignment can also be seen in Chinese academic discourse on the current conflict. For example, quote, "As long as the Palestinian issue is not resolved, and as long as there is no change in the current Israeli position on the issue, a conflict between the two sides is inevitable." End quote. We will continue to follow the Chinese reactions and policy response to the situation in Israel as it unfolds. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Have a wonderful Monday, and I will see you all tomorrow.